Dave, thanks for joining me. This is clearly a YouTube investment interview presentation from you to all of those that go into and have a look at the video on our investment platform, Entrepreneur Australia Funding Partners. Just for those that need to know, they can go and Google that at entrepreneuraustralia.com.au. So I'm chatting to Dave Mendelwitz, is that so?
Mendelwitz.
Mendelwitz, right, super, thanks Dave. CEO of Elmore Limited today. Dave and his team are in the market looking for some capital, and we would just like to share with people what Elmore does, why you're looking for capital, a bit of background to yourselves, the company, and what potential investors should be thinking about. So Dave, without much further ado, can I ask you please just to introduce yourself, a bit of background, and then step into an overview of Elmore, and then we can just chat from there.
Sure, okay, I'll try and keep it short with about myself. I've worked in the mining industry for about 26 years now. I was originally a geologist, and then I had other qualifications after that. I have worked around the world in lots of different commodities, from finding minerals all the way through to making minerals and building projects and running them. I suppose in terms of career highlights, if you want to pick it that way, I worked for Fortescue from very, very early in the piece. I started with Fortescue in a tent when we only had a little bit of money. In fact, we almost had none. And I was with the team that found the first economic minerals. I then became the head of business improvement. Well, before that, actually, I was the first registered manager of mining throughout all the feasibility study. We did a $140 million feasibility study for the Fortescue startup, and I oversaw mining activities that were part of that. And then I became the head of business improvement, where I oversaw projects from end to end, from exploration through marketing, through rail, port, and the like. I was there for about 6 years, and then I left and I started a business which ultimately floated with minerals in Brazil and Chile. I found gold deposits there and iron ore deposits. Ultimately, that business was ended because we had the wrong financier, and the financier themselves ended up in a lot of trouble and being wound up. And then from there, I took the lead and became the CEO of Elmore, with the managing director of Elmore as well. So I suppose that segues into Elmore. So when I started as the managing director of Elmore, Elmore was actually named Indior, and Indior was mining and processing iron ore in India. An Australian listed company, had been for around about 9 years at that point. It was very soon after I started that I came to the conclusion that what they had been doing, what they planned to do, was never going to work, basically because they didn't have a resource, and even if they did it, the economics didn't work. So a lot of money had been raised into the company by the time I had joined, and I was looking for an opportunity to restructure the business in the lowest risk possible, because I felt that shareholders deserved a low risk proposition after what they'd just been through. And so I've spent the last year and a half restructuring the business. So I've removed any material risks that exist to the business. I've completely replaced the team. We are 100% Australian focused, and now we are a contract processing company with a couple of projects up in the Northern Territory. Our major focus
just ask you there. So Elmore was listed a little while ago. When you went into a restructure, I think you probably went into a voluntary suspension. Is that
correct? Correct. Correct. So Elmore is a public company, and I suspended the stock late 2018, so a year and a half ago now, to be able to complete the restructure. And so we're still not trading on the ASX because I'm just finishing it now. In fact, the capital raise will be the last element that's effectively at risk of that. So on the back of a capital raise, we will put in revised accounts to the ASX with a cleansing prospectus and request reinstatement on the ASX. We have been in consultation with the ASX for the whole period, but there's never any guarantee that the ASX will allow the reinstatement or anything like that. This said, there's no reason that we can see why they wouldn't. So we have the right amount of shareholders, we have a cash flow positive business, we have done everything we need to do to completely restructure it. So we're in far better shape than a good proportion of the particularly resource companies that sit there on the ASX now. So it still sits as a risk because it's up to the ASX in the end to allow the reinstatement, but it's not, in my mind, a material risk, and it's certainly not a risk to the solvency of the company. The two are unrelated. It's more a liquidity risk for shareholders, and particularly minority shareholders who would come on, and hence the reason we're not actually looking for retail, small shareholders to come into this because of that risk. We don't think it's fair.
That's also a good segue to let the viewers know, those that are listening to this video, that you are specifically looking for high net worth sophisticated investors or professional investors. And for those that are interested, all of the information, the pitch deck or investment presentation, this video and other information is available on entrepreneuraustralia.com.au, and you can request a detailed information memorandum from me, and I will get it to you. So that's all there to be seen, but it's very important to make it clear that this is not a mom and pop retail investment opportunity.
That's correct, yes.
Now, Dave, in studying all of the material and in communication with you, I found your business model to be quite fascinating. I know in your material you say that this is not original to you. Aspects of it would appear to be original in what I sort of understand, but it is a business model that has been applied for many years in the past across the world very successfully. Can you share the business model and how you sort of go about adding value to the mining sector? Because it appears to me that you are not the proprietary miner, but you align yourself with those that have the mining rights, that are the mining companies, and you provide and bring your expertise, plant and equipment, etc.
Yeah, look, if I can just, I suppose, commence that saying, look, I've looked for many, many years at how capital could be applied in the mining industry with the lowest risk. And I've seen both ends. I've been part of a multi-billion-dollar startup. I've been involved in a company that ultimately ended up in administration, and I've seen everything else in between. I've worked in lots of different mining companies in lots of different areas of the world. And so, and I've also, this came from a point where looking at how do I move forwards with my money and other people's money in the lowest risk, and where do the inefficiencies lie in the business? And from all scales really, and found that there is a completely unserviced area of the market, which really represents the average ore body that's found. And I think if I can elaborate, the majority of ore bodies that are found that we consider ore bodies, i.e. we can measure how many tonnes of a particular mineral and at what grade, as opposed to the prospector model where they say, well, we found gold, right? And we don't know how much we've got because we haven't drilled it. The majority of these ore bodies have come from an ASX listed company because it's really the only platform, ASX or some other similar kind of market, where people are speculating, chasing multi-times return on their money, because that's really the only scenario where people have the money to put on into drilling. The average private prospector won't ever go in there and drill their project. Well, I'm talking the average one, some of them do, because they think, well, I've got gold, why don't I go and spend $2 or $10 million in drilling it? The problem we have with markets like the ASX is they look for very large projects. And it's driven for a number of reasons. One is because capital is competitive, and a large project's got a better story than a small project for most people. It's better to say I've got 1 million ounces than 50,000 ounces. That's one side. On the other side, the way that capital is issued is, and for many reasons, I'm not having a go at anyone over this, it's often better for people to write larger checks, particularly the fund managers that have large amounts that they can deal with, because the due diligence on a large project is the same as the due diligence on a small project. So ultimately, when people are getting fees, they're better off writing a $100 million check than they are a $1 million check if they have $1 billion under management. So, but if you're looking for ore bodies, you're more likely to find 50,000 ounces than you are to find 1 million ounces. And you're a lot more likely. And so most ore bodies aren't 1 million ounces, but most people now, because of the way that capital is issued, need 1 million ounces for it to be viable. Now, the other thing that we have in Australia is we have a very expensive cost of labour here. I mean, I've run operations in Brazil and India, and the average rate for a miner in these two countries would be between $20 and $6 respectively for the same quality that you would pay between about $1,000 to $1,500 and $500 in Australia for exactly the same thing, where you sell the product for exactly the same amount. And so once again, we're driven in Australia to amortise that labour over more tonnes with bigger equipment and so on. Now, I could go on for hours and I'll try not to, but so where that leaves it is there's a whole range of projects there, and I'll use gold as the equivalent. There are plenty of other commodities. The processing route or the processing costs are very similar to gold, but gold's easy for people to understand, and particularly with high gold prices at the moment. The average gold deposit that we find in Australia is more, on listed companies, more likely to be about 50,000 ounces, where you will find that there's 500,000 to 1 million tons of material, not ounces, running at just short of 2 grams per ton in an open pit scenario. Now, the issue is, if you look at that from a contained gold value, historically, you're talking about $100 to $150 a ton contained metal in that. And if you start pulling that out at, say, 10 tonne per hour, and say you're pulling out, call it $1,000, $1,500, $100 worth of revenue an hour, and then you're recovering through your process, somewhere between 50 and 95% of that. When you look at the labour costs involved in just overseeing that scale, if you're doing that at 10 tonne an hour on those average grades, it just doesn't work. You cannot pay for your labour force. But if you were to go and take that average deposit and extract that at, say, 50 tonne an hour, while it works, the amount of equipment typically required to do that is so expensive and it takes a long time to put it in, that the average deposit at, say, 50 tonne an hour is only going to last you maybe 2 years worth of extraction, but it might take you 5 years to pay it back. And it might also take you 18 months to build the site, in which case your opportunity to get the capital is actually decreased. So the market knows this. So if you have 50,000 ounces, typically the market then derates your company value very little, saying, well, there's no point. If they're going to come for money, they're going to need to go and find 10, 20, $50 million worth of equity capital to match the debt, if they can get debt, to build a plant which is ultimately uneconomic. So therefore people say, why would you want to hold this stock? Because they're just going to have to dilute me so much that they're never going to give me the return. So we saw this unserviced market there, and it's everywhere. I mean, I had a quick look in Australia and I found 15 projects where the metallurgy was close to what we did. I found 35 in Canada, and that was based on market caps of less than $10 million, where I knew that even if they wanted to, they just couldn't raise the money to do so. And that was based on low market cap, low, it made sense financially as well. Not, is there a big company there that's got a deposit that it found that it can't get away as well, because those ones get squirreled away somewhere in the background of the website and nobody's kind of aware of them. I can tell you the big guys find more little ones than they do on world-class projects, hence the reason they typically buy. But in South America, we successfully put an alternative to the typical plant, which would be crush, grind, gravity, and then CIL. The reason why Australians like crush, grind, gravity, and CIL is because you get greater recovery by percentage of your minerals using a cyanide in a CIL cover and leach circuit, and greater certainty, and you need that to eke every ounce out of it because of those labour costs I talked about before. But in South America, where we operated, the cyanide was treated worse than explosives. I mean, I was in Brazil for the Olympic Games period, and we weren't allowed to buy cyanide, but we were allowed to buy explosives because they were, and we know what's happening in Brazil with tailings dams now, and we know around the world that nobody really wants a tailings dam full of cyanide, and hence it might take you 6 years to do. So we put in crush, grind, gravity, and flotation. And we got a lower recovery than we would with CIL, but our startup was so fast. We put in our float circuit from beginning to end. We started the commissioning, and so we started the installation and we commissioned it within 7 days in a footprint which was tiny. I mean, the footprint the size of a car. And though our recovery was 10 to 20% lower than the CIL, the operating costs were $20 a tonne lower. The capital costs were at least $20 a tonne lower. And so the difference in terms of percentage recovery from a financial point of view was actually lower. So if we're putting 2 grams per tonne in there and making $100 a tonne or $120 a tonne revenue in there, if I get 10% lower, I'm getting $10 a tonne lower, but it's costing me $30 a tonne less OPEX and CAPEX to do so. So that hard earning, and also took me 6 years less to get its tail in them because the tails are benign and really, so we could actually pour a wear on. So that led me to think, well, hang on a sec, if the tailings dam, the CIL costs and so on were the imperative, why can't we use flotation? And I looked and found that we can in many circumstances. On those grades, it actually is always superior in every project that I've looked at. So the gap there became, how do you grind it? It's one thing bringing in a grinding mill that does 10 tonne an hour, but as I explained before, that doesn't work. It's not economic. But to bring in something that does 50 or 100 tonne an hour, you need several $1 million worth of foundations that can take 6 months to install. And in fact, my final act in India, when I shut down the company there, was to bury a $2 million foundation for a ball mill that we had just poured because there was nothing else we could do. You can't dig it out. So I cut off the steel and we left it, and it literally been, it was still curing when I did it, and it was heartbreaking to do so.
So on that note, Dave,
so this is what we did,
you're about to go in there, okay. So
so what we did, we designed
innovative foundation system.
We designed a system, and we've applied for the patents where we can bring in large ball mills or any other equipment, and we can build the foundation in a matter of days. So we could bring in a 500 or 700 tonne foundation, which is what's required for one of these, and put it together like a Meccano kit. And we're skid mounting our ball mill, so we can literally just slide them on. And so get a ball mill in 5 days rather than 6 months. And then at the end of it, take it all away, take all the foundations away, and there's nothing left in the ground. So economically it's better off, environmentally it's better off, and in terms of speed to getting production, the licenses and everything else, we're 1,000 times better off. And as far as we're the only people in the world doing that. And so that's really our competitive, that we can turn up with 1,000 tonnes worth of equipment and foundations set up in less than a month work there for 6 months, a year, 2 years, 5 years, pull it all up and go to another project and do the same again.
All right. So it's worth noting that you've got an outstanding team, a deep team that you work with, your team. From what I can see, that you bring three distinct sort of core competencies. One is the mobilization of plant and equipment, which is a massive plus for those that either can't afford, can't make the capital investment, or don't want to make the capital investment. Your team has the ability, the skills, the know-how to conduct in-depth due diligence exercises on the particular project or mining initiative. And then you have the ability to sort of partner up with the owner of the mining rights, the mining company itself, and help in the management of the mining process. I might say that technology that you have developed with regards to the foundations is patent pending, which is a major plus. You've got projects on the go, North. Question to you, is this a WA-centric, a WA-focused sort of initiative of yours? Is your business WA-focused? Do you see it going nationally? How scalable is it?
Yeah.
And your revenue seems to be quite strong at the moment. You talk about $400,000 in revenue per month. A few more projects on the go, with a $40 million free cash flow estimate over the next 5 years, which is healthy free cash flow. How does that side of things look? What's the rollout plan? What's the scalability? How's the revenue forecast looking?
Sure, okay. So we're WA based, though we do actually have people around Australia for various reasons. We have a chairman based in Sydney, a non-exec in Queensland, and we have a metallurgist who lives in Melbourne. Our two projects at the moment are in the Northern Territory. So we have a project around 3 hours south of Darwin at the Francis Creek mine, where we're currently processing iron ore and will soon be processing gold. We have a project another 8 hours south of that at Tennant Creek at the Pico mine, where we're currently designing and building a project, a magnetite processing plant for a client, and then we will be putting in our own gold extraction plant at the tail end of what we build there. We are then looking in Australia, in WA, at a number of projects. I wanted to be Australia focused, because number one, because I just spent the last plus decade of my life working on the other side of the world and flying back and forwards to South America and North America on a monthly basis. And I was kind of sick of it. And then India after that, which I was actually quite comfortable with because it's pretty close compared to Brazil. But I was looking, because as I go back before, I was looking for something nice and clean and low risk. So of course we know Australia jurisdictions really well. It's really easy for us to do it. It was really easy for me to start again because I know so many people in the mining industry here as well. We've nicely landed on our feet with these projects in Northern Territory, because Northern Territory is a nice place to operate. In fact, we've got a national highway running pretty much straight past both projects and towns nearby. It's a very pleasant change from being out in the middle of the jungle on the top of a mountain. We are working on WA-based projects. Once again, I just drive down the road. We know plenty of people there, and there's no shortage of them. And that's really our focus at the moment. This said, I know so many players in North America and Canada, and Canada is a mirror of us here in WA. And so for us to roll out internationally, Canada, even though it's a long way away, is probably a good place. Good rule of law, good language. We've got so many contacts, very similar industry. We could apply this elsewhere, but I don't think we need to. I'm not trying to compete with the big houses like MRL and the like. I'm looking for a small, niche company. I would like to have 5 projects on the go at any time, and I'd like to achieve that within 3 years. That will achieve us somewhere between about $20 to $30 million worth of free cash per annum, with a manageable size team. In fact, from an administrative point of view and technical kind of valuation point of view, we've got all that now. We don't need to expand at all. That's just more a few operators on the ground and fitters on the ground at those projects. What we're trying to have is a model with the least amount of people, because when things go wrong, it's actually people that are the highest risk to the company. While you're sitting around working out how to fix something, you're still got to pay their wages, as opposed to getting, I mean, our sites, we only have a few people on our, and so we can sell them fish for a month if need be. So it's all about this risk reduction. And so we're trying to stay close to home. We're trying to get a right amount of projects where we're getting great returns to investors, but we're not getting to the point where we're starting to risk too much by getting that next level of, trying to do the $100 million or $1 billion projects. Maybe it will change in time when we've got a really solid, but there's competition at that level already, and there's no real competition at our level, and we can make a company there with those kind of revenues. It's, if we're safe enough to get valued as an industrial company and get industrial multiples of it, as opposed to constantly trying to fight to stay alive, because one false move on $1 billion project is the end of companies. And go and ask RCR or others similar like that, what happens when it goes wrong on the big scale.
Right. Dave, in the last sort of 5 minutes or so that we have, can I ask you to just outline for me, you're looking to raise now circa $1.5 million. If you can just share with us how you see those funds being applied. I'd also like you just to share with us your sort of thinking around what risks are potentially, there to be taken into consideration on behalf of investors, and why should investors, in a nutshell, back you and your team? Why should they get excited about Elmore?
Okay, no problem. So we, in terms of raise now, so we have a couple of contracts, and as I said before, they're producing around, we're invoicing about $400,000 a month on that. I must say that sometimes one in particular has been a little bit slow to pay. I'm reasonably comfortable on that. We've got general securities over it. We have to keep a close eye on it. But we have about $250,000 going out a month and $400,000 coming in a month at the moment. That'll expand as we get into the gold processing, and to do that we need to build more equipment. And so we want to, there's around about $800,000 worth of deposits that I need to put down now, and so I want to raise $1.5 million to cover those deposits. The rest really is just working capital buffer on it, because if someone's slow or something happens, you're better off just having a bit of a buffer on that. The rest of the equipment's worth a lot more than the 800,000 deposits, but the balance of payments will be around 6 months as all the equipment is finished. Now, by that stage, because of our regular cash flows, we can get equipment financing against it. As equipment's landed in Australia and it's built, it's also infinitely fundable because it's against the contract. We've got cash flows to match it already, and it's all asset-specific security there. So, but it's easier for me to do the first bit with equity, and it also gives me the opportunity to bring in some other people into the register to participate in what we're doing. So in terms of material risk, I suppose the two major material risks there, one would be if someone is very much ASX centric and needs this to be a listed company. Look, we're on path to be backlisted in the latter part of the year, but I can't provide any guarantees of that. I can, we've got contracts and securities and the like, and there's no reason why we wouldn't be. But I think that that's probably the biggest risk, is the liquidity if we don't. So that's why I like people that can cover that. We will be dividend focused, and hopefully, as a listed company, the equity pricing will reflect the dividends and the inherent values of the contracts and the like. But if we're unlisted, there's still very much dividend focus and be the returns coming from that. The second risk there, which I would say is a bigger, well, not a bigger risk, but something that needs to be taken into account, is we are at an end of the spec of the industry there, where people often struggle to raise cash themselves. So while we're coming with a solution where they don't need to raise as much cash, they still do need to raise cash. One of the PICO contract, there's no issue for us on that side. They're fully funded. It's all going ahead. The other contract, they're still raising some money. We're at the moment assisting them by talking to other partners who can help. And we're quite comfortable it'll get there, but that's always a risk. So mitigation to that risk is we will assist them, whether it be point them in the right direction or actually do technical work to help them get their funding. There, we have got general security so we can ultimately step in, but also the money that we're raising is against equipment. So if something's wrong, we can deploy the equipment anywhere else. I mean, it's generic stuff that you can take somewhere else, or you can sell it. And we have other assets. We've got a big fixed plant there worth a lot of money that we can sell as well. But I would be lying if I said it wasn't a risk. And ultimately, what that risk would lead to would be timely of some of the realisation of cash from these contracts. But we've deliberately pushed them back to give us and our counterparties time to fix that, and we've got mechanisms in place to do that. And I suppose, so why should someone be excited about us? Look, it's an opportunity to come in after a restructure where we've had a lot of chance to go through the business and clean it up. So it's not an organically growing business where we've now got warts all over us, and now we've got an next big thing there. We have, an untapped market that we're going to that we know for sure. We haven't found a single hole in terms of applying our equipment. The only hole is making sure they've got enough cash to build a haul road or strip some ore on it, and that I mentioned we're working on there. Plus, we have cash flows now. We're not projecting to the future saying we hope it goes right. So we're cash flow positive at the moment. We've got shareholders in there at the moment. I'm not going to them at the moment because they took a beating from the past. It's not fair. I'm trying to give more value. And so the opportunity that really exists is for someone to jump in and write on all of their and our hard work now to be part of this, which I think is pretty exciting. So does my team.
Yeah, fantastic, Dave. Thank you for that. Well, let me just remind the viewers, those that are watching this video and watching this interview, that all of the detailed information is available on our investor platform, Entrepreneur Australia. You can get a detailed investment presentation pitch deck with all of the details that you would expect to have access to as a potential investor. You can also contact me directly. My contact details are on there, entrepreneuraustralia.com.au, and I will get the information memorandum to you, the investor. And if need be, I can hook you up with Dave and you can chat directly to him. For those that are watching this, if you're looking to raise capital for your business or thinking about how you go about it, please contact me directly. Dave, thank you so much for sharing. We, of course,
Thank you very much.
Your team and you the very best of luck. It makes a great deal of sense to me. I think your business model is a great business model. And there's deep experience and expertise in your team. And of course, commodities, gold in particular, has been doing extremely well of late. So ride that wave while we can. Thank you for sharing, and all the best, and have a really enjoyable day. Thank you to all of you who have watched us. Cheers. Thanks, Dave. Bye-bye now.